God bless you. In this video, I'm going to explain several trading terms like market structure, swing points, uptrend, downtrend, higher high, higher low, support and resistance zones, supply and demand zone. I will try to capture everything in this single video. All right. So let's proceed. What is market structure? Market structure is the overall pattern or framework that tells us if the market is trending up or trending down or trending sideways or even consolidating. Right, so let's get to the chart. We're already in the chart though. All right, so let me look for the one that's trending down. So as you can see, you can see candlesticks move down. This is actually a downtrend, right? And most times you would hear a statement like the trend is your friend, right? So just observe. Candles move down. This place is called lower low. Lower low. Alright. So here is called lower low. It goes up. Here will be called lower high. So here is called lower low. Alright. Please note as it moved down and went up, this is a swing point. This is already a swing point. So it came down, went up. So here is a what? Swing point. Alright. So watch, it moved down, came down. Here's a swing point. You can also call here lower low. Here is also a swing point. You can also call it higher high. So look at, let me zoom out. So as you can see, lower low, lower high. It came down again, lower low. Then this bullish candlestick appeared. So lower, lower, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Another thing to learn right now is retracements. Look at, this is downtrend. As you can see, market is selling down. So, all right. So this is another example though. So as you can see, lower, lower low, lower high. Now note, since this is a downtrend, this green candle is known as retracement. Let me give you an look at, see, since it's on a downtrend, this is called impulsive move. Impulsive, IMPULSIV, impulsive move. Then this is retracement, impulsive move, retracement, impulsive move. If we are on uptrend, this is impulsive move, retracement, impulsive move, retracement, impulsive move. Okay, so look at impulsive move. Then this bullish candle green appeared, retracements, impulsive move, green, retracements. Okay, look at again impulsive move retracement, impulsive move retracement, as in, so this the way downtrend structure is. Look at uptrend. Here will be what? Higher high, higher high, higher low. Alright, higher high, higher low. Remember, here so it is swing points, swing points, swing points. Like, see, at any point it retraces is a swing point. So look at higher high or swing points, it retraces lower low, higher low or swing points, higher high, higher low. You grab, or better still, you can say impulsive move, retracement, impulsive move. These red candles, retracement, impulsive move. So as you can see, right? Then this one, so market could be uptrend. When there's uptrend, you'll be seeing higher high and higher low. When there's downtrend, you'll be seeing lower low and lower high, right? Now, but when the market is this way, that it goes up, come down, goes up, come down, goes up, come down, that's sideways. We'll say it is ranging. Ranging. So let me get horizontal line to explain better. Let me make it bold. I'll also change the color. We'll get another one. So as you can see, price went up. It couldn't break here. Came down, went up, came down, went up, came down. So this is what we call sideways movement, a ranging market. Also, this is called resistance zone because price could not break this. This is called a support zone because price couldn't break below. But look at, it went up, came down, and you see it broke. This is what we call breakout. Breakout. It broke out. But after it broke out, look at, it got to this support zone, broke out, went up to retest the support zone, then it continued the down movement, right? So this is another example of a downtrend, as you can see, lower low, lower high, or you say um, impulsive move retracement. Here is a swing point, so you can see it's a clear downtrend. You can see, okay, let me fall. Then this one is obvious. So this one is obvious ranging market, as you can see. It went up, came down, went up, came down. Let me get horizontal line. So it went up, came down, went up, came down, went up, came down, then it broke out. It retested as it went up to touch this support zone. And you can see the massive breakouts. So when market is ranging, is a signal that oh, there will soon be a breakout, maybe up or down. In this case, it broke down. Okay, so we have three type of market structure. It could be uptrend or downtrend. That's one. Second, it could be ranging. Then the third one is this consolidating. This one, there is no clear structure. As you can see, is there is no clear pattern. So we'll say it is consolidating. So at this point, you just hold on. There will be a possible breakout. So, so see, and yes, there was a breakout. So see, there was breakout downtrend. So I've already explained what it looks like on charts. I just want you to see the spellings. So remember, for uptrend, we have higher high, higher low, downtrend, lower high, lower low. Okay. Then I mentioned retracements, impulsive move, and I explained that market structure we have uptrend, downtrend. So currently I cannot impute caption in my video. All right. So that's why I have to just show you the spellings that way. If not, there's meant to be caption on this video. Okay. So, but it is clear. So this also an example. I mean, ranging. So this is the resistance zone, support zone. You could see market was ranging. And price went up, came down, went up, came down. Then it broke out, retested, and went down. Alright, so I've seen an example for uptrend breakouts. So as you can see, it went up, came down, went up, came down, went up. It came down, then it broke out. It broke out. At this point, we will see that the bulls are now in control. So when market is consolidating or sideways movement that is ranging, just expect breakout soon. This is what I mean by breakouts. On the norm, when it gets here, it would come down, but it got here and it went up. That's breakouts. But this one did not retest like the ones I've been showing you that it would retrace down before going up. Alright, so under thing I want to explain now is what we call reversal. Let me clear these horizontal lines. So as you can see, we're on downtrend, right? Downtrend, lower low, lower high. Okay, we're on downtrend. Then all of a sudden, there is now reversal. Call it change of trend or change of direction. So before now, we're on downtrend. As you can see, then at this point, it reversed and began the higher high, higher low, higher high, higher low. You can see it's still moving up. Right. So under trading term I want to explain is what we call a demand zone. All right. So as you can see, it was selling, it got here and it went up. This is what we call a demand zone. Price got to this place and went up. So this is what we call a demand zone. I will get horizontal line and impute here. So this demand zone, whenever price comes down again to this zone, it will be a signal to do or to buy. Like when candlestick returns here, I'll be looking for reversal candlesticks that will enable me to buy. It could be bullish engulfing or um, or a bullish pin bar. So so remember, um, you know, or even look at initially it was selling down, it got here and went up. So here too is a demand zone, although it's not very strong. Then if you observe when price came down, it later went up. So um, demand zone, supply zone, resistance zone, support zone, swing points, they are area of value. Let's say candlesticks were moving up, it got here and it came down. Here is a key zone. Here is an area of value. It means that if candlesticks return to that zone, we should expect it to either sell down or break out. This is an example of a supply zone. As you can see, market was actually ranging, then it got here and it sold down. So here is a supply zone, which is a key zone or an area of value. So in the future, when price returns back to this zone, we expect it to either sell or they should break out. So also note that here it was ranging, right? It went up, came down, went up, came down. So this is also a key zone. This is also a key zone or area of value. So this is under demand zone. It got here, went up. So this is demand zone. So if candlesticks return down here, this will be, I'll look out for reversal candlesticks to buy. Look at a good example. Price was going up, got here. Here became supply zone. Here became demand zone. It went up. It got back to this supply zone. Guess what? It sold down. Why did it sell down? Look at, let me zoom out. Because a bearish pin bar appeared, which is also a reversal candlestick. I've explained several trading um, concepts. Um, I explained reversal. For example, look at the bulls were in control. You could see higher high, higher low, higher high, higher low. Then all of a sudden, it reversed. The bears took control. It began to sell down. So this is also another example of look at. So this is a resistance zone, support zone. Price got up, came down, got up, came down, got up again. So this is a resistance zone, support zone, and later on there was breakouts. So these resistance and support zone, they are what area of value or or key zone. That's we believe that when candlesticks of price get to that particular price again, something is expected to happen there because it was respected. As in, this zone was respected. Price came here, respected it, came down, respect it, came down, respect it, came down, respect it, came down. Then there was a breakout. As in, look at breakout from this zone, this support zone. Right, so go to your MT4, MT5, or even trading view. Right, go and look out for market structure. Are we on downtrend or uptrend, or is it ranging or consolidating? All right, so look out for reversal, look out for swing points, impulsive move, um, retracements, higher high, higher low, lower high. Take note of this. Then when you mark out those area of value, be it supply and demand zone, support or resistance zone, when you mark them out, you could actually wait for price to get back to that zone. Then you might, as in, look out for a reversal candlestick and try to buy or sell. Just practice. In trading, is the more you practice, the more you get confused. Yes, and the more you get confused, you seek clarity, you ask questions, you still watch more YouTube videos, you pay for mentorship. Just keep practicing. You'll be with time, you'll be enlightened, you understand better. So go ahead and practice. So look at, this is 1 minute time frame, for example. I will get horizontal line, I will impute it here. Why? Look at, it went up, came down, respected this zone, went up again. So let me get another horizontal line, impute here. Okay, so it went up, came down, went up, came down again. So I believe that if it should get here, this zone again, if I see a bearish pin bar, I can sell, or a bearish engulfing candlestick, I can also sell. You grab, or even a bearish candle. For example, look at, when price got to this support zone, what can you see? This is looking like a bullish engulfing candlestick, but it's not really accurate. But you can see a bullish candle is sold up. Look at, price got here again. You can see a bullish candle is sold up, as in it went up, right? So just observe. You can go to M1 to just M1 patterns forms very fast. So you can just practice and try things out, right? You also go to the higher time frame as well, but on M1 as in, it will just help you to practice faster because there'll be several candlestick formations. So if you gain value from this video, endeavor to comment value in the comment section, and also like the video as well, and do well to share, get others enlightened. The goal of this channel is to raise purpose-driven traders. I mean, people who they are bankers, lawyers, teachers, pastors, doctors. Go to your, as in, go about your daily business, your daily purpose, daily work. When you return back at night, you could still make out time to trade. Yeah, so that's what I actually teach, that you don't need to be on the chat every time. Pursue your life purpose, then later at your convenience, you could still leverage on the financial market to multiply your income, right? So, um, endeavor to comment value if you actually gained value from this video.